Okay, Friday, September 12th, about hour and a half after closing, 2:30 San Francisco time. What is that? Oh my God, I got jet lag. 2:30. What is it? 11:30. All right. Okay, great day for Tom and Tony. As you, I love it when they're happy. They're happy today because today the market was down 0.67%, a little bit over half percent. Spoos were down right here, as you can see. I'll zoom in a little bit and I'll go real quickly over the technical aspects, I guess. Pretty boring. Nothing's changed pretty much. All right. So the reason why they're happy is because this nice red tick right here, down, like I said, 0.67%. IV popped. It is now above 25. As you can see, it's 26.885. Volume, buying volume is decreased, meaning there were more sellers than buyers today, which is why it went down. Okay. Bad news is it's still green, so we don't know if it's going to rebound or not on Monday, and it's still above its average here. And my other indicator is still above 80. So for the bears to be happy and for this to happen again, for IV rank to pop up above 50, get a high, maybe even 60, we want to see this go red and this go red, just like right here. Okay, will it happen? It could happen on Monday. Okay, if this happens, boy, oh boy, get ready because IV will pop and you can start selling premium right around here, do some golden geckos, meaning it's right here. You're going to be doing a golden gecko 1 standard deviation away on either side. So basically what you want to do is you want to stay in between that range, and you're going to have duration on your side. It should be at least 45 days away. So you have 45 days for the stock to come right back into its range, which look, it did it in like 2 weeks here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, what, 12 days? And you were right back to where you started. Okay, and look what happened 12 days from then. Okay, IV was here, and in 12 days, where did IV drop? Bam, you can take off 50% of MAC profit and you're out. So I'm looking for that setup. Okay, if you see this, by the way, if you see this happen on Monday, you should be, if you see the spoos down on Monday, you could watch Tom and Tony. It'll be a great show because you'll see Tom happy, happy, happy. And you know Tom, he loves to say things in threes, so he'll be very happy, much, much, much happy, as Tom says. Okay, same thing with the rest of the markets. Here's the Qs. Here's the Nasdaq. Okay, but man, look how strong the Nasdaq is. See how high it is over here, but it's still going down. Um, this is the. Let's see what we got here. Here's the Dow. Load, Bubby, load. Man, my computer's really slow. I might have to just. We had some great questions today from Josh Winter, and a new member, Oxygen. He asked about some Karen trades, so I'll go over that in a minute. In fact, let's just do that while this loads. Josh had some great questions about, the difference between going naked and do I always do a golden gecko or do I ever sell naked puts and calls? And also, Oxygen had a really good question about Karen as far as adjusting the trades, which is really the key. And I'll go into that as well. We can use Dole for that. I got a great thing to show you here. All right. This is a neat thing in Dole. They added this high option volume choice here. It's a watch list for options with a lot of volume in it. And as you can see, I clicked on my filter. I hit earnings, and my IV rank is 35 or greater. So I'm looking for any ETF with an IV rank of 35 or greater, and a stock with an IV rank of 50 or greater. Right? I just took down EWZ. So let's look at this. This is a great example. Let me clear this. So I will choose strategy. Let's see if I can collect enough, first of all. Okay, I'm going to go to strangle. Short strangle, 56 days expiration. You know what, let's just do 45 for now. And then hit go. Okay, perfect. Here we go. We can do the October 18th expiration with 35 days to go. You can see that I can collect. These are as close to the 1 standard deviation line as I could get, which is an 84% probability out of the money. This is a little bit less, but the reason why is if I go further out, it's 87. So I want to kind of go to stay at 82. You can see there's an 86 cents credit. Let's see if that's enough. Let's go back to TOS. Go to EWZ, which is I think right here. Yep. go to the trade page. We're going to go to October, which is right here. We can see the expected move is $4.13. I need to be able to collect 19.8% of that. So go here. What is that? $14.13, right? $4.13 times it by 0.198. I need to be able to collect at least 81 cents in a strangle. Perfect. I can make this trade. So I'll definitely look at making this trade on Monday. But I'm not going to do a strangle. All this means is when you put on your golden gecko, just take whatever the market, the mid price is, because since you can't do a strangle, just whatever comes out to, that's okay. You know you can do it, because a strangle you can collect 86%. So I'll clear this, go to choose strategy, go to Iron Condor, normal Iron Condor, change this to 45 days because that's easier. Hit go. Boom, okay? And then I want to make sure I just move these in to as close to this 2 standard deviation line as I can to be able to collect the most money, which is basically a strangle right there, pretty much. A little bit outside to make sure I collect enough money. See, I can collect 76 cents and I don't have unlimited risk. Okay? This is perfect. So I might look at selling this on Monday. Because it's after hours. I don't know if this pricing is right. I want to make sure I can still collect 20%, 19% on Monday when the market opens. And IB rank is 97%. So here's the thing. I don't know which way EWZ will go. You can look at the chart. Here is a 30-day chart. Look, it took a hit. You can be betting it'll come back to fill this gap right here. Okay? But I don't know. So since I don't know, that's why I love the golden gecko. How do I collapse this again? Where did I go? Here we go, collapse. And I'll just click on this to move it out of the way. All right, so let's say, oh, Mark, it could fill that gap. What if you want to skew it higher? Well, you got 35 days to be right, so let's skew it higher. See this? What if I move it up a strike? Now keep an eye on how much I can collect now. I can collect a little bit more. But see how this is skewed higher? And then I can always adjust these back out right about there. Bring this in like right about there, 83 cents. Okay, but as you can see now, I'll zoom in a little bit. See, so now see how I've given myself more room to the upside. And this is called skewed bearish. If you think if that's your bias, I don't know what your bias is. You could be like, well, Mark, I don't know. Could it go higher? Well, let's look at your other chart, Mark. I hope my toss is running really slow, so let's go to the chart. Here we go. Here's that big move. You could the technical. I don't know. Maybe a lot of you guys are technical traders. I'm sure a lot better than me. IB rank is here. I know this will collapse. Jeez, when was the last time it was that high? It's never been this high in 12 months. I think there's an election going on or something like that in Brazil. So anyway, for this to go higher, this has to go green and this has to go green. It's at the bottom. Okay, so I don't know, like similar to like here, right? Okay, so will it turn up? If it turns up, it has to, it has to come back up. Like here, green here and green here at the same time. It went green here first, then it went green here, then you saw the pop. Okay, will it go lower? Of course it could go lower. What if it breaks below its 233-day moving average? If it breaks below here, my friends, oh my God, Slimmy will tell you it'll tank. But anyway, I don't know, so I'm gonna do a golden gecko. All right. Now you need to, Mark, can you go wider? Sure. If you're you're worried about a bigger move. Well, let's see. I don't even know what our strikes are. All I know is I have a 72% chance of making money, and my strike prices are 44 and 54. Let's go look. Zoom in a little bit. Here we go. 54 is right here. Okay. And 44 is all the way down there. Okay, so that's a 1 standard deviation move. 44, it's a pretty wide. You see what I mean? That's why I love the golden gecko. Either way, I got some cushion. So I'm definitely gonna look at that on Monday. Okay. Oh, answer Josh's question. Do I always do naked? Golden geckos? Yes, because I'm trading inside an IRA account with this project. Do I have to in an IRA? Yeah, but if you don't, you get portfolio margin. Don't go naked. Don't do okay. You can try to go naked, but let me show you the difference. Okay, keep an eye on this. I can collect 83 cents, right? Now watch and look at my risk. 617 to make 83. Look what happens when I delete these. I will delete this. I will delete this. Look what happens. I can make 94 cents. So what is that? I had 83 cents before. 9 cents more to get, but I have unlimited risk, and I'm going to take up much more buying power. So this is why whenever you sell, and I'll go back. I'll hit this back button here. Back button here. See, so whenever you buy the wings, just so you know, the brokerage houses, when they evaluate risk, 2 standard deviations is where they see risk at, right? So if they have to cover your bet, like what if you don't have enough money in your account or whatever it is, okay? So you could synthetically do a naked position by simply buying the wings like I've showed you here. Can you also protect yourself from unlimited risk? And I protect myself again from a drastic move by setting a good to cancel order for a stop at double of my credit received. So for example, if I sell this at 83 cents, okay, that's the most I can make is 83 cents. Okay, but I could lose $617. I don't want to lose $617, but I'm willing to risk double what I collected. So if that's 166 bucks. No, what is that? Yeah. Okay, a rough right around there. As you know, my math sucks. So anyway, I'm willing to risk double what I collected. So I could set a stop for so no matter what, I won't lose $166. What's great about a golden gecko is you're almost always right ahead of time, or you're wrong and you're never going to come right. That's the good thing about selling high IV rank this way. Okay, so I'll set my stop so no matter what, I won't lose. I cannot lose more than double this. Okay, but I can make this, and I'll be more than happy to go roll and redeploy and make more money again. All right, so I hope that helps. Well, quick, 30 seconds. As far as oxygen questions about adjusting your positions, let me delete this real quick. I'll delete this, and I'll delete this. Okay, so let's say this is any position. Doesn't really matter what it is. Karen will, if it's high IV rank like this, yeah, Karen will try to sell she'll try to sell at least a standard deviation and a half, okay, out of the money. So she'll try and sell, wait, I'll just delete this too. Okay, so she likes to sell 95%, 90 to 95% out of the money positions, like this, okay? Now, what happens is if this position starts to go against her, meaning if this position starts to go down, okay, and then it looks like this all of a sudden, it gets to about 70%. What she does is she doesn't wait till she gets in trouble. She will close this position, okay, and figure out how much she lost, okay, and then redeploy back to maybe around here, and then collect this money. Okay, well now look at the difference. Watch. I'll go here. 88 cents, right? Go back out to here. 30 cents, right? So look at the difference is 50 cents. Okay, so instead of selling one position, she'll double up. She'll sell 2 of these to make up for that 50 cents she lost. Okay, well actually has to do more because, you know what I mean? She wants to collect at least double so she makes up for any money she lost here. And she goes, okay, well let's say I'm down 50 cents. I sell 2 of these. That's 30 more cents more. So that means I need 20 more cents to make up the difference. Well, she could sell a call. Okay, she'll sell a call then. It's the same 35 days. Or there it is. She'll sell a call at 35 days, right, and collect more money to make up the difference. All right? Hope that helps. I'm at the end of my time limit here, so if you have questions, hit me up. Do a shout out.